2014 was a tough year for the brewery sector. As we approach half year, how is 2015 shaping up? Adewale Okunrinboye, research analyst at ARM, joins us to review the brewery space. Adewale, it's great to have you on the show.
Thank
we
you.
recently had earnings come out for international breweries that happened just this week, I believe. Those earnings were not too good, though the top line, there was growth in the top line. This didn't filter through to the bottom line. So it clearly looks like it's a tough year for the company and for the sector as a whole.
Yeah, as you rightly mentioned, so but for international breweries, the key thing was you saw they recorded double-digit revenue growth, which just reflects the fact that they are largely a value brand company, and so because that's where the current market is as basically gravitated towards the value beer segment, so they continue to record strong numbers in contrast to Nigerian breweries and Guinness, which Nigerian breweries had pretty much weak 2014 numbers. But going into so we're digging into the results. What you can see there is that whilst revenue was good, earnings were down, and just largely because of higher debt charges for them, and they had to significantly gear themselves up last year because they're doing some capacity expansions, and so the higher costs on that just impacted their results, and so that's what you saw feature on the bottom line.
Still, surprisingly enough, there was a dividend of 25 kobo per share, very low yield, 1.25%, which isn't very strong. Yeah. And a lot of analysts are saying that, because we know that, that will reduce the company's cash by about 800 million naira, approximately, of course. And a lot of analysts are saying that that is cash that could have been, diverted to reduce the company's debt. So do you think that perhaps the company should have held off from paying this dividend? And do you think that generally, breweries should maybe just hold off from paying dividends for a while?
Well, companies dividend policy could dictate otherwise, but I think for international breweries, as you rightly said, the size is quite insignificant. Let's not forget, international breweries is coming from a period whereby they weren't paying dividends. They only started paying dividends just recently, and so sometimes as well, companies here tend to want to ensure that they have a diverse shareholder base, and so pension funds, for instance, are precluded from investing in companies that don't have dividends. So companies still just try sometimes to just pay a dividend just to ensure that they have at least those guys that are attracted to. So even though dividend might be something minimal or not inspiring, but just to tick off the box that we paid a dividend this year. So, and I think, but for them, like I said, the key point for the gearing was largely linked to their capacity expansion. So the company feels that it has a much stronger growth outlook over the next 5 to 10 years. Then I mean, why not? They could continue to, as long as they generate cash flows to service and pay down the debt over time.
How should investors, play this space? Because those kind of earnings, perhaps investors might, start to be a little bit more cautious about, that stock. I know it's a stock that isn't very liquid as well, but in general, when you look at, the competitive space, the likes of Guinness, Nigerian breweries, what should investors be doing right now?
I think for the action, as I said earlier, the action largely lies with the companies that are strong on the value beer side. And so, for instance, you've seen Guinness, for instance, so in contrast to Nigerian breweries, which pretty much struggled. I mean, their Q1 numbers were quite disappointing. Guinness has had strong numbers from the end of last year up into this year. So they had double-digit growth Q4 last year as well as Q1 this year, because their financial year end is June. So I think Guinness, perhaps in terms of momentum, if you look in terms of something that's likely going to generate positive sentiment, Guinness is likely where the action is likely going to be in terms of just the numbers. So their revenue numbers were quite strong. Their bottom line, continues to be a bit weak, just likely reflecting the fact that Guinness is going through they have this Made of Black advertising campaign they're running, which is taking a lot of on distribution costs, as well as they're also being impacted by the higher interest expense charges. I think most companies this year, because what we've seen is because of all the tightening policies by the central bank, interest expense has gone up for quite a lot of consumer good companies, not just brewers as well. So you may see a bit of slower earnings, but I think for revenues, top line, you're likely going to see the action lie with Guinness. Guinness is just likely because of their innovation brand Origin, which has been doing quite well for them.
Now we heard the news that NAFDAC is actually planning to ban locally made brewers, obviously the likes of Ogogoro and that type of thing. Clearly, this will have an impact on the sector because if that does happen and then we don't have those products available, perhaps we'll now start to see the users of that shifting to some of these value brands in. From these, larger companies. So it's on that. I mean, and the size of the local spirit market, local beer, and it depends. So you see, I've seen estimates ranging between, say, between a quarter and half of the entire domestic beer market is made up of local spirits and things like that. So if the measures are effective, because I mean, I was reading newspapers about the Nigerians NSCDC talking about going to try to enforce the action. If it's effective, then yes, you could see some people, because I mean, if the option isn't there to drink
your local spirit. Maybe you might see a few people start to look at the more formal beers sold in bottles that are registered with agencies like NAFDAC. So you may see a bit of shift to that, which may benefit these big players in terms of demand, in terms of revenues.
I guess it depends on the price too, because those value brands have to be able to, because these locally made spirits, they're not very expensive, are they?
No, they're not. They're not. So, so for instance, like Guinness Guinness's or innovation brand, most of these value beers are sold at the cheap end, at the low end of the pricing spectrum. So you may see that. You may see a bit of substitution for consumers to just replace those local beers with the and then also don't forget that it's a health scare. So it's a health scare that is driving this.
There's a poisoning. Cases of poisoning.
Cases of poisoning. So you might actually see a few people just ship, because if you're not sure of what is being sold in this local brewery, you might just actually ship. But depending on how the enforcement is effective and how much awareness the agencies are able to, the NAFDAC is able to raise on the issue, I think net is positive for the brewers.
Thank you. Let's leave it there. Thanks so much for joining us in studio. Adewale Okunrinboye is a research analyst at ARM.